Hey everyone, welcome back to the Crypto Trader Network. My name is Chris, and today we're going to be reviewing OTO protocol. This one came from one of my viewers. They requested that I review this, so I appreciate that. Definitely looks like a good one. So again, we'll go through the web page and then the white paper, and then go ahead and make a purchase on their dashboard. All right, so I wanted to touch on real quick. Remember, Crypto Trader Network, we are doing a monthly giveaway on March 31st. That'll be at 7 p.m. Eastern time. That'll be a live giveaway for all my subscribers, and we're giving away 5,000 Sphere. So all you have to do is subscribe, and you're automatically entered in. As long as I can see that you are a subscriber. Sometimes if you're hidden, in the description below, it'll tell you how to unhide your subscriptions. If you don't want to do that, leave a comment on this video, and that will also enter you into the drawing. So good luck, and hope that you win. All right, let's get right into this OTO protocol. Okay, so I like to start out on CoinMarketCap and take a look at the chart. So it looks like this one just launched on 325 just 4 days ago with a starting price of 574. And we've got a nice uptrend going with a little bit of sell-off pressure in the past couple of days. That's totally to be expected. Usually a lot of people will buy in on the first couple of days and then sell off, make a little bit of profit. But we're kind of stabilizing here. We're right around 930. And that's right around where I'd like to go ahead and get in on this project. I'm going to invest probably 500 in this one because I like the tokenomics and I like what the team has got on their white paper. So again, let's go right to their web page, and we're going to click on that from CoinMarketCap so we go to the right place. And this is their page. So a farming as a service plus auto staking and auto compounding protocol on Avalanche Network. This one's a SAFU fork, and I guess SAFU had like a insurance fund, and that's kind of what makes this one more of a SAFU fork than a Titano fork, but they're all pretty much the same. So we have 382,000% highest fixed APY in DeFi apparently. Farming with the OTO Vault, and we'll get into that in the white paper. This one gets paid 96 times a day, so every 15 minutes. That's twice as fast as Sphere, Titano, or Quantic, like we've reviewed before. Automatic staking and compounding as usual. They do a monthly airdrop from their treasury yields, which is kind of cool. So it's just kind of an extra rewards for you, so that's nice. And the ecosystem is built around the OTO token, so OTO, OTO, we're going to go with OTO. They are reviewed by RugDoc, so we'll go over to the RugDoc portal here. And RugDoc, like I said, SAFU protocol fork, custom reflection token on Avalanche Network. They've got a couple of things in here about the contract, but nothing major. I will say that they call this one some risk. These are high risk. These are all high risk. So, we're getting into this one a little early. Like I said, it's only 4 days old. So it's could be a little bit less risky. Hopefully the token price goes up from the point we're purchasing. And that'll give us, a good return. And then plus the rebasing, of course, and auto compounding, auto staking, helps with furthering that return. But they are high risk. So some risk, yeah, no. So let's go back to their web page. And so again, 382,945% fixed staking APY every 15 minutes. And we'll go into the calculator. Again, they always really try to get you on the FOMO. Invest 1,000 and you can make 3.8 million. That's if they're going to be around for a year. This protocol actually does have some good tokenomics in place that could keep them around for quite a bit longer than some of these other protocols. They have taxes and buy and sell tax, of course, as usual. But they also have a decay, which is great. So after 365 days, the percentage of your yield goes considerably down. And so that keeps it from basically being a perpetual model forever, where you're always going to get, 382,000% interest. It's not sustainable. So having that decay model greatly increases the sustainability in the project, in my opinion. So that's great. So how OTO works: OTO token is the native token with interest rebase rewards are paid. Every token holder automatically receives 0.02355% interest every 15 minutes, and all you have to do is hold it in your wallet. Auto compounding and auto staking. The OTO Vault serves as an insurance fund to achieve price stability and long-term sustainability of the OTO protocol by maintaining a consistent 0.02355% rebase rate paid to all OTO token holders. So that's part of their treasury. It's kind of split between the vault and the treasury. The treasury provides support to the OTO vault in the event of extreme price drops, so they can rebuy tokens from the treasury, and also they're going to be investing quite a bit of their treasury into the farm as a service, as they call it. So we'll get into that in the white paper as well. And then the other thing is the cauldron. 2.5% of all OTO traded are burnt in the cauldron. So basically, I believe they said every month they're going to burn 2.5%. As those tokens are burned, the price should increase of the actual OTO token since the supply is going down. So that's always good. And then they're going to have monthly airdrops distributed to OTO token holders from the proceeds of the OTO Treasury investment ventures. So as they make money with that treasury fund, rather than just increase the treasury, they're going to airdrop that right to token holders. So that's kind of nice. Okay, so we have the buy and the sell tax. I don't know why it says 0% here, but it should work out to 5, 5, and 4, which is 14, so 14%. So auto LP injection, 4% goes into the liquidity pool to make sure that there is plenty of money for buying and selling. Then 5% goes into the OTO vault. 2.5% goes into the OTO treasury, and another 2.5% goes into the cauldron. Then the sell tax is a little bit increased, 16%. These are not as high as some of the other ones, so that's not too terrible. 4% again into liquidity, 5% again into the vault. The increase of 2% into 4.5% for the treasury goes right here, and then another 2.5% to the cauldron. So remember, the cauldron is that burn mechanism. All right, so they've got the roadmap here. And they've got a team. The team is not doxed. Like I said, they are on RugDoc, and I believe on the white paper, which we'll click on right here, they do say that they are going to KYC. Okay, so here we are in the white paper. I'm not going to go too deep into this. There is a lot of kind of redundancy in here from what we read on the webpage. So OTO token is powered by rebases that reward holders with a 0.02355% interest every 15 minutes. This means an annual compound interest of 382,945.41%. This annual percentage yield is fixed, and it is secured thanks to the 14 and 16% taxes with buys and sells respectively. Okay. Also, in Security Standards team will undergo KYC with a third-party provider and locked liquidity for 12 months. So they already have locked their liquidity with PinkSwap, I believe, and so that's already done. But it says they will undergo a KYC, so that's good. All right, so farming as a service meets Titano tokenomics. OTO protocol proudly presents a farming as a service automatic staking, automatic compounding protocol. This is a huge competitive edge against existing products and a big answer to what's the difference of OTO protocol from other projects. So they're trying to, basically say, hey, we're going to have investments that we make back into the protocol to kind of keep those rewards coming in. So that's good. I don't think any of the other ones have really come out with what investments they plan on making, other than just the buy and sell taxes, adding to their treasury. So the concept of farming as a service is very simple yet powerful through pooled funds that are easily attained through the tax system of the OTO protocol. The development team will initiate multiple blockchain farming. This allows the OTO vault to be exposed on different protocols and earn rewards either through staking or providing liquidity. All right, so the fundamentals. Low risk with the OTO vault. 5% of all trading fees are stored in the OTO vault, which helps sustain and back the staking rewards by maintaining price stability. Easy and safe staking. Again, it's the auto compound and auto staking right from your wallet. Interest yield with automatic payments. You don't have to restake. High fixed APY, auto token burn, etc. We kind of went through all these on the webpage. Their roadmap doesn't have anything there. Contracts. Key features. Again, a lot of this stuff is just going back through what we saw on the webpage. Auto staking and compounding. The rebasing. The OTO Vault. OTO Vault uses an algorithm that backs the rebase rewards and is supported by a portion of the buy and sell trading fees, which is 5%. So the OTO Vault is what helps sustain and back the staking rewards that we receive. And then we get into the OTO vault farming. So the proceeds of the OTO treasury investments are distributed to OTO token holders initially on a monthly basis. But in the OTO vault, what they're going to do is invest into Anchor Protocol, which is great. So that's a sustainable return. Again, Mirror Protocol on Terra as well, and then Curve Finance on Ethereum. So they have some ideas here on what they want to invest their vault into, and that will help with again the sustainability of that project. Then we got the OTO Treasury. Again, we've talked about that. And then we'll skip through these a little bit. Automated Circular Economy, Fixed APY. We've already seen that one. We don't need to deal with APY calculation. They've got a calculator. What I wanted to touch on was this long-term interest cycle, though. So basically, for the first 12 months, you're getting that 0.02355% per day. Once that 365 days is up, then it switches to 0.00211% for 6 months. I guess that pretty much gives you time at that point to sell your tokens if you want. You could probably sell your tokens and then reinvest if you chose for another year. And then after that 6 months is up, it switches to the 6.5 years, which is 0.00014%. So you're not going to be making really anything on auto staking and compounding once you reach that basically 18-month mark. So you're going to want to basically sell at that point and reinvest if you choose, or take whatever out that you made and enjoy it.
For your information, I just made a cool $25 playing the markets. Buy low, sell high, that's my motto. I may just quit my job at the power plant and become a full-time stock market guy.
And then they do actually have an end cycle. So past the next 6.5 years, if the project is still going, then it'll go down to 0.0002% in perpetuity until the vault is completely wiped out. And the OTO token is the ERC20 token in the Avalanche network, which rewards its holders with automatic passive interest payments every 15 minutes over the lifespan of 13.5 years until the maximum supply of 3.25 billion tokens has been reached. So they do have a decay model, like I said, like we talked about with that long-term interest cycle, to keep it from going into infinity. Okay, and we have buy and sell fees, amount of the fees, 14% for buys and 16% for sells. We saw that. We went through the fee breakdown already with liquidity pool, OT vault, OT treasury, and the cauldron. The cauldron I wanted to touch on. 2.5% of all OTO traded are burnt in the cauldron. The more that is traded, the more get put into the cauldron, causing the circulating supply to be reduced and keeping the OTO protocol stable and healthy in the long term. Then they go in and talk about the different percentages of the tax that comes out. So the 4% for the automated liquidity system, and the initial supply and all that kind of stuff. So let's go back into the web page here, and we're going to go into their dashboard. And I do like the website. It's laid out really well. They do have a calculator, so we can go into the calculator function here. And my plan is to buy 55 OTO tokens, and that works out to roughly $500 pre-tax. At 919, and so we can kind of scroll through the calculator. In 1 day we'd be at $517. 30 days out, we're looking at 996. So we double our money in a month, and the 180-day mark, we're looking at 29,000. So these auto compounding tokens, that's the power of auto compounding, as they say. So hopefully these protocols can stick around for a while, and we can make that kind of money, because that would be great. All right, so let's go into swaps. I do already have some AVAX in my wallet, so this is a OTO to AVAX swap, and we want 55 OTOs, and we're going to adjust the slippage here. We'll set it to 16%. And we'll try that swap. and confirm. All right, and looks like that has gone through. So we'll go back to the OTO protocol dashboard. Oh, sorry, looks like we need to go to account here. And we'll connect our wallet. And there we go. Your balance 55, and we are auto staking. All right, so that was the review on OTO protocol. I want to thank my subscriber Ash for bringing that to me. This is a good one. I like it, and I think that they've got some really good plans going on. I liked the white paper. Looks good. I do hope for a KYC soon. That always gives me just that little bit of security, knowing that the team has been KYC'd. But RugDoc has gone through their contract, so that looks good as well. Again, good looking project, and getting in a little bit early. Hopefully we make some good returns on this one. So if you like the video, again, please hit that like button, and remember to subscribe for our monthly giveaway. It's coming up in just a couple of days here, so we're giving away 5,000 Sphere, and hopefully that will go to you. All right, thanks again. Have a great one.